Hey guys, it's a Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know what was the best for my viewers and subscribers. First off, sorry, I know the video is a little bit later than normal. I went into work early, stayed a little bit late, so I'm getting it done a little bit later than normal. But I still wanted to get the video out for you today. So I'm down about $200 today, sitting at $59,167.23. So quite a bit of red today. Then for that 1 week mark, we're down $615, about a 1% loss. That 1 month mark, we are up right around $1,500 with a 2.5% return. That 3 month mark, we're up nearly $6,000 with an 11% return. Year to date, we are up $9,300 with a near 19% return. That 1 year mark, we're sitting at $9,900 with a 20% return. And then all time, we are up $23,800 with a 67% return. Buying power sitting at $30.14. That's going to be going up once T. Rowe Price pays me that dividend of $124. Jumping right in, first off, we've got Realty Income, which I did recently buy another share of, sitting at $62.40. 171 shares, $10,600 of market value. Average cost is $65.02. 18% of the portfolio is in Realty Income. Today we're down $37. Total we're down around $450 with a 4% loss here on Realty Income. Dividend coming in on the 13th of $44.71. And guys, I love this dividend paying stock. I know the dividend does not grow that much year over year, but they do small increases every single quarter, and they do pay monthly. So I do like adding to this because every single month raises the more I put money into Realty Income. Next up, we've got Altria sitting at $52.58, down today. Got 320 shares, $16,800 worth of market value. Average cost is right around $47.30. 28.5% of the portfolio is in Altria, so about a third of my money is in this stock. Down about $200 today, up almost $1,700 total with an 11% return. Guys, I like this stock. It is the biggest dividend, biggest dividend payer in the portfolio. It pays me about $320 every single quarter, and this buys me a share of either Apple or Visa, whichever one I prefer. Could buy me about 2 shares or about 2.5 shares of T. Rowe Price as well. So this is just one of those that I put a lot of money in. It's a high yielder. Even the dividend grew from, I think it was 98 cents to $1.02 now. So the dividend grows at a relatively good rate, about 4% a year, and that was enough to bump it up by like $12 because I have so many shares. So this is one of those that I will add to it if it gets below my average cost, but I'm not adding it at these levels simply because it's up so much. Next, we've got Coca-Cola, ticker symbol KO, at $71.10. 15 shares of this Dividend King, around $1,100 of market value. Average cost is right around $61 per share. 1.8% of the portfolio is on Coca-Cola. Today we're up 30 cents. Total we're up nearly $160 with a 17% return. And guys, this is one of those that as of right now, I'm not going to purchase anymore simply because it is up so much. But generally, we don't see a big boost in that stock price for Coca-Cola. It's been sitting near that $60 range for quite some time. But all of a sudden, in the past couple of months, it's bumped up about $10 per share. So as of right now, I'm not touching the stock. I do want this to be a pillar within the portfolio, though. So when it gets back down near my average cost, I will be adding to it. Then we got Apple at $223. I've got 6 shares, $1,300 currently for market value. Average cost is $210.88. 2.2% of the portfolio is in Apple. Today we're up $2. Total we're up $72 with about a 6% return here on Apple. And guys, this is going to be the single biggest position given due time. I will be adding to it regularly when it's around that $210 per share. So as of right now, I'm not going to be adding any Apple, but I hope to really take advantage of the next time it drops. Maybe, iPhone sales will dip a little bit. Maybe more people won't upgrade. like they're expecting. Maybe revenue will drop a little bit. Maybe the AI rollout won't go as smoothly as they're projecting. Eventually something will happen and Apple will drop, and I plan on really taking advantage when I can. Then AbbVie's sitting at near $194 per share. We've got 95 shares, around $18,500 of market value. Average cost is right around $95 per share. 31% of the portfolio is in AbbVie. Today we're down $37. Total we're up $9,400 with a 104% return. By far my best overall return in any stock that I've ever owned. The dividend has grown as well, so I've got great stock appreciation as well as great dividend growth. And guys, this is one of those that, according to Peter Lynch, a lot of people cut their winners, and he says they pull their winners and they grow their losers, and I do not want to do that. Even though I have a near like $9,400 gain, I don't plan on selling it. I don't want to punish the stock for rewarding me so fruitfully, and I'm just going to use those dividends and buy something like T. Rowe Price. So the strategy worked. I did a really good job analyzing the company, and it's paid dividends and grown. So I'm just going to let this keep growing and use that dividend income to buy something like T. Rowe Price, or put it towards Visa. So AbbVie's done more than its fair share, and I plan on holding it for the long term. Then we got Visa at $285. We've got one share. Of course, market value reflects the price. $268.29 is our average cost, so up here a little bit on my single share. About 0.5% of the portfolio is in Visa. Today we're up $1.34. Total we're up $17 with a 6.3% return. Pretty nice gain here for a single share, but this is going to be one of the pillars as well. I want it to go Apple, then Visa, Coca-Cola, Google, and then Berkshire. So I'm going to have to buy a lot more Apple and Visa and Coca-Cola in order for it to and Google and Berkshire, simply because the top 5 right now I think are a bit overpriced and above my average cost. So right now I'm going to be focused on stocks that are lower, like Realty Income or T. Rowe Price. And even though both of those are $10,000 plus positions, I'm okay with adding to them, because when stocks in my top 5 drop, I will be putting fresh capital in and really focusing on those positions. So it will take time. I've invested for 5+ years now. So, and it did take a lot of capital to get those positions where they're at. So patience is important when it comes to investing. And honestly, I haven't owned Apple for that long. I bought it back in 2018 and I sold it simply because I wanted to own the business, but I was not a very long-term investor at that point. I kind of bought and sold more than I should have. I owned stocks like Snapchat, Coca-Cola. I owned Facebook for a few months. So it was just before I really got used to the dividend investing strategy. And back when I was first starting, of course, you always have a lot to learn when you're taking on something like investing. And so as time's gone on, I have done research on Apple and Visa and determined that I think that they are, phenomenal businesses. They have, Visa has better dividend growth, but I do want Apple to be one of those pillars. So given time, those stock positions will grow the more capital I add. But quality doesn't go on sale all the time. And that's evident here with Visa and Apple. So eventually there will be a correction. People will stop spending money as much, won't spend as much cash, and maybe Visa doesn't do as many transactions and it drops a little bit. Or like I said, with the iPhone sales, eventually they'll dip and people will say it's the end of Apple and will overreact and sell it off. And then that's when I'll really take advantage of those opportunities. So even though those stocks are not down as of right now, I'm excited for when they do drop and I get a good opportunity, but I'll just be patient and focus on what's a good deal right now and allocate capital accordingly. And then next, of course, finishing out, we've got T. Rowe Price at 104. We've got 101 shares, $10,500 worth of market value. Average cost is right around 110 per share, so down a little bit here. 17% of the portfolio is in T. Rowe Price. Today we're down $11, and total we are up around we're down $570, down about 5.5% here on T. Rowe Price. And I think that this is just one of those businesses that got beat up during the pandemic. A lot of people do their own investing and don't want a company like T. Rowe Price to do it for them. And I think over time that's going to change. They have a bunch of assets under management. They do a really good job of reinvesting capital. Their management has grown the dividend for 25 plus years. So I'm not worried about the dividend growth or the overall revenue growth. This is one of those that I think the market has mispriced, and I think over time sentiment will change, and I will eventually have a return that's close to AbbVie. I could see it like almost doubling from this position. The only bad part about that is that I might not get a good buying opportunity for quite some time. So hopefully it stays at these prices. I can buy a bit more, and eventually we can see something like the $200 per share that it was at before, a few years ago in 2021. So I love T. Rowe Price. It's one of those that I really want to take advantage of while it's down, because this could easily turn into something like an Apple or a Visa. I think it's mispriced at these levels. And I think the market's overreacting, and eventually I think it will correct itself because the revenue's growing. They're very good at capital allocation, and management knows what they're doing. So I think eventually the stock will be rewarded, but while it's where I think it's mispriced, I want to take advantage. And then, guys, I am looking at a few stocks here. I added Costco to the watch list. I want to own a share for Munger. It's a great business, great dividend growth. Small margins, but I think overall they do a very good job at rewarding shareholders. They've done special dividends when they have cash on hand, and that's really the golden ticket for me here with Costco. It's not necessarily about the special dividends for me, but it is about proper capital allocation, and it's very refreshing to see a management team be honest and say, you know what, we have excess capital on our balance sheet. We might as well give it to shareholders because we don't see a fruitful way to put this back into the business at this point. So that's something that is rare. A lot of companies, like example, AT&T, they bought stuff like DirecTV, Warner Brothers, and they took on unnecessary debt. They had to then spin it out, and it was a big headache for investors. So they did the opposite of what AT&T did, and that's really what has made me look into Costco a bit more. I have watched all the Berkshire meetings, Berkshire Annual Hathaway meetings, and Charlie Munger does speak on Costco a few times during those meetings, but then he also did talk about it at some of the shareholder meetings for, I believe it was the Washington Post. I think there was a paper that he owned, Daily Journal, sorry. During those shareholder meetings, he gets asked a lot about Costco, and while he says it's not worth an unlimited price, he does not plan on selling shares. So even though it is at a bit of an inflated price, you guys can see the 52-week low to high, 540 to around 920. So it's near its high here. Well, I haven't done a lot of analysis on the company. From what I have seen, I do like their capital allocation. Like I said, I do appreciate that they admit when they can't put money back into the business efficiently and just reward shareholders. And the dividend growth has been pretty good over the past decade, and they have sprinkled in some special dividends there. So with excess capital. So I do think management's very competent. They're very good at running their business, and they're very honest about running their business, and that's why I'm considering putting cash into Costco. Next, we've got Apple, which I have owned in the past. I bought and sold it, and I shouldn't have. I was dumb. So, like, as you guys can see, as soon as like August or September, I bought and I sold it, and I shouldn't have. So I did I did sell it at 158. Right now it's at 156, so it's right about my buying cost as of my last tranche. So I do want to own Google, and I want to own it for the long term. Part of why I did that, though, is because I'm kind of waiting to see what the overall sentiment is and how the business changes based on these based on what they do with the business, considering that they ruled it a monopoly. I'm not exactly sure what's going to be spun out of Google or what they're going to split up or break up out of Google. So I want to see what they do with the company and how they change it before I buy it. So I'm very bullish on Google currently, and even though I think um, I think as of right now, from what I've seen, um, the last update, I believe it said that they were going to uh, make it so Google's not the default search engine on Android, Pixel, and Apple products, because I know that they were paying Apple a certain amount of money per year to make Google the default search engine. I think it would be default for most people anyway, so even if they didn't pay, even if they weren't like funneling money into Apple to make it the default, I think most people would have that anyway. So I'm not exactly sure what they're going to spin out of Google. And once that lawsuit gets figured out, and it's more clear for the future of Google and how they're going to change or spin out whatever they're going to change within the business, once that gets settled, I would not mind owning Google for the long term. I'm just kind of waiting to see exactly how they change the business, to see how it affects profitability before I jump in, because I've done a deep dive on Google, on Alphabet stock, and I love the business. I use it every day. I post videos on one of their platforms constantly, so I do enjoy YouTube, and I think it's a great revenue grower. I think it's got great year-over-year growth, and they've got a really good business when it comes to YouTube. It's just I'm not sure what they're going to spin out. So if they spin out like their Google ads or YouTube ad revenue or something like that, it might change my sentiment a bit on the company. So I'm very bullish on Google and I want to own it long term. I just want to see what happens with that lawsuit first. Then we got Berkshire, which I've talked about a lot, but overall, guys, long story short, I want to own it for Geico. I want to own it for Wesco Insurance, National Indemnity, plus all the other insurance arms that they own. I want exposure to that float for one, and two, I want See's Candy. It's a very small business, but a very good cash generator for Berkshire. And they also own Dairy Queen, Duracell. There's a lot that they own, and I just want to own a piece of those businesses. For me, mostly, though, it's the insurance float and See's Candy. If See's Candy was a standalone company, I would own it in the portfolio. So this is just a good way to get exposure to all those businesses, plus the great stock portfolio. And I do think, even though Charlie passed away, and I know Buffett's getting up there in age, I do think that overall his lieutenants, Ted and Todd, are very good at allocating capital. And Ajit Jain and Greg Abel are both very well nurtured in the Berkshire culture, and I think they will be able to carry the company into the future and produce really strong results overall for the company. So even if Buffett isn't at the helm, I still want to own Berkshire Hathaway. Then, of course, we've got Meta. I look at Meta every once in a while. It's very close to me when it comes to Google. For me, they could be almost interchangeable, but I do like Google better. So every once in a while, I put Meta back on the list just to see where the stock price is at. But with that being said, guys, I wanted to say thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy, and when you do, hit the bell notification so you don't miss any uploads on my YouTube channel. I've been trying to post Monday through Friday. Given the work schedule, sometimes it's kind of tough, and I might have to double upload or upload later, and for that I apologize. But I'm trying to do my best at the everyday uploads. So thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.